You were listening to chartingwealth.com for Tuesday, the 14th of March, 2017. We see stocks, both the S&P 500 and QQQ, the NASDAQ 100, up for the day. Gold is also up. Bonds are down. Let's jump right into our two-day chart on SPY, which is, of course, the Spiders S&P 500 ETF, exchange-traded fund that tracks the S&P 500. What do we see going on? Well, it appears we're getting close to a crossover going down on the two-day chart. We have the derivative oscillator has already flipped over into the negative, and we're getting very close on the two-day chart crossing over going down. Now, don't forget, on Wednesday, we have the Fed meeting. All the market mavens have told us we expect the Fed to approve another increase in the interest rate. We shall see. The market has sort of already priced that in. So again, all Fed meetings can be dangerous, and until and unless we have a weekly vertical crossover like we did on the S&P 500 all the way back on right before December, actually on the 25th, as I recall, the week ending the 25th of November, that is our magical point. When we see weekly vertical crossovers occur, it shows us there is enough steam in the market to drive it up for a reasonable amount of time to make a profit. Of course, it has been driving the market up, up, and up since then. The market did top off last on the two-day chart back on the 2nd of March. It in fact topped out at a high of 240.32 for the S&P 500. It has since slid sideways, although the day was up. It's still, we're seeing, as far as our indicators go, down momentum. So we'll continue to watch and just see what we see. Once we do have a confirmed crossover, we will move our blue two-day vertical crossover over, showing that we have down movement confirmed, but that has not happened yet. If we look intraday on the 2-hour chart, we actually see that there was a strong up movement in the morning on Friday, and really the market has not even topped up to that. It's been moving sideways since then. So let's keep moving. We don't have a trade on the Qs, of course. Now on the S&P 500. Let's go to the Qs and take a look on the two-day chart. What do we see there? Well, we see also that the Qs has actually started to cross over. That is not confirmed until the close of business on the 14th. Once that happens, if indeed it closes below, that is, the crossover is maintained, the candle is closed out, then we can call it that. We, of course, don't see the derivative oscillator flipping over yet, so that would give some pause for concern that up movement has ended. When we look at where our charts are, of course, we can see that the NASDAQ 100 has actually made a higher high. So it is actually up for the day, 0.17, 131.61 is where the last price we have recorded. Actually, the high was 131.64. The last was 131.46. So again, we have higher movement on the Qs on the first day of this latest two-day candle. If we look on our 2-hour chart, what do we see? We see, of course, a huge bump up in the morning on Friday the 10th. Then the market petered off and then, of course, reached a higher high at the end of the day on the 13th. That was Monday the 13th. So again, what do we have going on? Well, we have a little bit of schizophrenia because we have that two-day chart going down. Even though the 2-hour and the weekly are going up, that does not give us a tradable option at this point. It gives us a lot of worry. Now, if you were in the market, could you, of course, stay in it? Yes, you could. But again, just be careful. We're still within the bounds of the weekly vertical crossover that occurred all the way there in early January. That weekly vertical crossover took place. So we're still in the upward move. We're still well above the weekly trend line. We don't have a two-day trend line anymore because it's crossed over going down or starting to. That's where we are then as far as the NASDAQ 100 goes. Now let's take a look at the only down chart for the day. That down 0.63% It is the 20-year Treasury bond fund. It's been going down now. This is the sixth. We have the sixth two-day candle forming down. We had a two-day vertical crossover back on the 8th of March, and we're continuing to see down movement. We don't yet have, as we talked about over the weekend on the comprehensive review, we don't have a weekly vertical crossover, but that may be on the way. It may also be on the way to see the derivative oscillator flip over into the negative. Hasn't happened yet. We shall continue to watch if we see what's happening intraday. Of course, it was a down day pretty much throughout the day on Monday. So we'll continue to watch and see if TLT gives us the opportunity for an inverse trade. Hasn't happened yet, but we're just patiently waiting. What do we see going on in gold? Well, let's check it out first on the two-day chart. We see that gold has already blown through the weekly trend line. It did that back at the same time that it had its two-day vertical crossover. That was on the 8th of March. And gold has continued to trundle down. Did have a bit of an up day. It was only 0.02%, so 0.2% is not much of an up day, but it is an up day. And looking at our Heikin Ashi candlesticks, and if you don't know what Heikin Ashi candlesticks, that means in Japanese, average pace. You need to listen to our online training at Charting Wealth on Heikin Ashi. It's one of the best we've done. It's actually the most popular download for training that we have on the website. Encourage you to listen to it. It helps us, unlike traditional candlesticks, it helps us follow average pace, which is extremely important. And we can see the average pace is actually up some. It hasn't pushed through the down two-day trend line. And again, we've already broken through that weekly trend line. Like we said, we see derivative oscillator continuing to heat up and the price percent oscillator continuing to move down. So again, we're waiting to see if and when we have a crossover going down, a weekly vertical crossover on that big weekly chart. It has not happened yet, but it may be in the cards. Until and unless that occurs, we're not going to call a trade in gold because we're still in an up move on the weekly and a down move on the two-day. And when we have schizophrenia between our charts, we don't trade because you're asking to get your butt kicked. Folks, that's where we are as we end the day on Monday the 13th, go into Friday the 14th of March. We so appreciate you being with us. We hope that you are every single day filling out that daily market worksheet, of course, except over the weekend when you fill out the weekly market worksheet. If you don't know what we're talking about, that means you're not a subscriber and you need to be. It's absolutely free. It's what we call priceless. You have to go to chartingwealth.com, the website, put in your first name, your email address. We will send you every day this podcast that you're listening to. You'll also get the links to our How to Read a Stock Chart video, along with our daily market worksheet, our weekly market worksheet, the layout that we use at freestockcharts.com. And you will also get, let's see, I think I've laid everything out. I feel like there's one more thing. The daily market worksheet, weekly market worksheet, the How to Read a Stock Chart video, and the layout. That's everything that you need to figure out what in the world is going on in the market and to train with us, because we have had a great year so far. If you look at our endpoints and the tops that we've had so far through February, our indexes are up. This is just the trades that we have called from buy-in to high points, up 15.04%. You want to see how that's proven? You can go online under our weekly success reports and you can see just what we're talking about. Now, again, we're not a stock calling service. We're not talking about you trading real money. We're not calling those shots. We aren't paid to do that. We aren't authorized to do that. We're not authorizing you to use what we give you except for educational purposes. We want you to practice. Once you get good at doing this, at reading a stock chart, you can do whatever you want with your own money. But we simply want you to practice with us, opening up an online trading account in any of the online brokers. And when we say online trading account, we mean a virtual trading account where it mimics real money. You can become a virtual millionaire, then you can start practicing. But folks, it's going to mean you investing 10 minutes of your time a day. For how long? I don't know how long. It depends on how quickly you get this. It depends on how well the markets actually work with the charts we're using, and doggone it, they are working really, really well now. And how good you are at modifying things to fit the way you think, the time you have, and the kind of requirements that you want from your trading. And we just want you to practice with us. Fill out these daily market worksheets. Practice a little bit every day, and you will be amazed if you stick with it. If you hit it once or twice a week, or 3 times a week, or maybe 4 times one week and a couple the next, stop. You're wasting your time. You're going to learn nothing except how to lose money. If you are serious, you have to practice with us every day. It only takes 10 minutes. I don't care if you do it at 2 a.m. or if you do it at 5:30 in the morning. But you need to do it. You need to stop for 10 minutes. Fill out that daily market worksheet. It will be the most important thing you potentially do for your future when it comes to understanding how the stock market works and potentially amassing wealth. Now, we appreciate you being with us. You appreciate what we do. We ask you to do 2 things for us. Go to our YouTube channel and subscribe. We've got a couple of thousand plus subscribers there now. We appreciate all of you. Also, go to iTunes, subscribe to our podcast, give us a 5-star rating, say something nice about us, give us a great review. You guys have made us as high as number 9 in the world in stock trading podcasts. It's where we are currently. You guys have made us as high as number 6 in the world for stock market podcasts. So we so appreciate you. Please, you have questions, problems, concerns, you can always write us, cw@chartingwealth.com. And of course, the most important thing you can do is sign up at our website, giving us your email, making sure that you're receiving all the information we have on a daily basis. And it, my friends, is potentially for you priceless if you will dedicate the time and energy. God bless. Take care from chartingwealth.com.